All right, everybody, welcome back. So just a quick little video here. I want to talk about order flow and watching what's going on in the market. Now, this might be considered more of a scalper's perspective, but we really want to talk about these numbers right here and these numbers right here. They're the same numbers that I'm now looking at on the chart, right? You can see how they keep updating. So we've got this price in a very tight, very small range. We're breaking to the downside. In that downside move, we can see right here at the 18, there's a lot of orders. Now, we just broke through those orders. What happened when price got down there and broke into those orders? Well, it gathered up all that resting liquidity, but it got rejected there, right? It bounced back up. Well, why did it get bounced back up? Well, orders got filled, right? Buy orders got filled. People bought in there. Remember that we can't see somebody's stop, right? That would be inappropriate. Nobody can see your stop. We can't see somebody else's stop. So these are orders to get into the market, and we don't know why somebody's getting into the market, right? They have their own bias and their own reasons for getting in, but those are entry orders. And we know that those are entry orders because of a couple of things. One, if I'm trying to sell something, I need people to know about it. And if I'm trying to buy something, I need people to know about it, right? It's advertising. Think about trying to sell a car or trying to buy a car. If I want to buy a car, I need people to know that I'm looking so that they can help me find one, right? Maybe somebody has a car for sale and they hear, oh, hey, Sig's trying to buy a car. Let me go show him my car. So if I'm a buyer, I need people to know I'm willing to buy there. And if I'm a seller, I need people to know I'm willing to sell there. So these are entries, okay? Maybe I want to sell to open, maybe I want to buy to open, but these are opening orders that we're looking at here on the dome, not closing orders. And we don't want to try to think through the process. Why is somebody going long here? Why are all those long orders going there? We don't want to think through that yet. Let's just think about what we are seeing on the chart and what it means when we're seeing those things. Okay, so I'm drawing out some areas here. You can see these different lines here. Those are my lines. They're not an indicator or any kind of calculation or formula. They're just NASDAQ lines that I draw. Okay, and we can see where the order flow is, and nothing's really standing out drastically. The orders are just kind of doing their thing. Now, when I start to zoom in, things are going to get a little more tight. But before I zoom in, we want to have that bigger picture. Where did we come from? Where are we going? Right? And that's where people, I think, make a lot of mistakes is they don't look at that bigger time frame. So if we was to get off of that chart that I'm on and we'll go out to a 5-minute and we'll look at the market for just a moment in this time here. This is a 5-minute chart. What's going on the day? Well, the bonds opened at 8:20, and you can see that this is my time zone, and the market time zone is an hour ahead of me. So the bonds have been open for 7 minutes. That was this very sudden spike here in the market, and now we're starting to settle back down. Right? It makes perfect sense. We've also tagged the bottom down here from the kill zone at 2 o'clock this morning. So after all of that whipping around, the market is got a couple of choices. We could hold this range and begin to work our way back up, or we can continue to go down and perhaps revisit the roundy down here, the 2600. A roundy is a little bit like gravity, so it is pulling us in that direction, but all of these orders are in the way. And right now we've got a really large order sitting on the bid down here, right? Can see it standing out right there, that really big order at the 12 half. Okay, so now let's start to zoom in a little bit. We've got multiple tests across the bottom, multiple tests across the top, and spikes through. In those spikes through, they hit these sell orders and were rejected, right? So it's what we call a raid. You've got price sitting in a range and it spikes up, it raids into that liquidity pool, and it took a rejection and it came back down. Now, like I said, this is a very zoomed in fact right now. We wouldn't actually want to trade this zoomed in, but we want to talk about what's going on. Why is price moving the way that it is? Why did it go where it did? So when it comes down to these lows, there's all these orders sitting here, and it keeps getting bid up. Every time we come down to the 12, there are people sitting here ready to buy into the market. They're happy to keep buying in here. We can see it got bid in again, and again. Right? So we could use that for our advantage. Maybe if I was a scalper, I'd be thinking, the next time we go back down there, maybe I want to take a trade. Of course, if we keep bumping through it, we're going to go through it, right? Persistence beats resistance, and the more times we kick the door, the more chances we have of the door actually breaking in. But we're just talking through the price action a little bit here this morning, trying to understand what it is that we're looking at and what we should be expecting. Now, another thing to focus on is the fact that what kind of candle I'm on. Okay, this is a Heiken Ashi candle. So what if I was to go back to a regular candle? You can see now that it looks a lot different. But we were still bidding up. Every time we came down there and hit the bottom, there was buyers willing to step in. But look, now the buyers are a lot lower this time. The big order that we were just seeing was much lower. It was below the 12. Whoa, there we go. So there's some liquidity, right? Some news came out, 7:30. The news came out, and we took a sudden spike in the market. The orders are all over the place. Look at the size of these orders coming through here. 11, 15, 18. Now, those aren't orders, excuse me. Those are the accumulation of the orders. What we want to see is, as it's adding up, we want to see how far it finally got before we moved. It got up to 24 orders at one level before it finally moved. That was all those orders down there. And it was just chewing more and more and more of those orders before it finally started to move. Okay, and this is a liquidity raid that we just had right there. Focus on how many orders are coming through and how big they are. I've got my filter set to 2, but with this liquidity coming in, I'm going to bump it up to 3. Okay, we're looking for big orders in the market, but not one big order. We want to see repeated big orders, big, again and again and again. And what it's showing is, hey, there's enough price action here to get these orders off of the dome, to get these orders off of the chart, because it's the only way that we're going to move up or that we're going to move down. Okay, without those big orders coming in, taking out that price action, we won't go anywhere. Okay, so now I'm zoomed in enough that we can see those orders here on the dome. All right, so if I'm a buyer and I come in and I try to buy the market, the only way that price is going to move up is if I can wipe those orders off of the dome. Do you see that big 9 or that 6 right there? 7 now? We won't break through that level unless there's enough buyers to wipe out all of that price action. Let me see if I can actually take a picture, freeze the screen perhaps, and then we can talk it through. Look at 15, 17. Those are big numbers resting on the dome. Okay, that's a lot of overhead volume that it would have to break through, like a ceiling, before we could move up. Okay, and like right now, 15, 13 orders sitting there. It would have to get through those before we could move up. So we would need to see a lot of orders coming in, right? A lot of buy orders. Look at that massive gap that we just saw there. Let's pause the screen. All right. So I've got the screen paused. I took the whole thing and just took a snapshot. I'm going to zoom into this a little bit. I think we're going to keep that side of the page for a moment. So let's zoom in. Let's just kind of talk this through here. We were right here when that candle closed. Okay? That's where we closed in the market. And we opened way up here. So we went from 1050 to 1150, a 1-point move in the market in the blink of an eye. Now, the orders that we're seeing here with the screen paused, those are the orders that came onto the dome after that move was made. But when that move was made, it wiped out all of the orders that were sitting there. Okay, everybody who had an order waiting on the dome to get in, and it was these orders here, right? Because when we were here, we had all the red orders sitting there. It wiped out all of those orders in that jump, and they showed up over here on the right side of on the left side of the chart. So let me let me zoom over to that side, and we'll scroll up. And what we want to look at is, what is the time, right? It was 7:32 and seconds. This is a seconds clock. Every 10 seconds we get a new candle. 7:31:40 was the candle, and then 40:50 was another candle, and then a couple more. All right, so in the blink of an eye, it wiped out all of those resting orders, and you can see all of those resting orders. Okay, they're on the dome. All of those sell orders got filled in the blink of an eye. What was it? 10.50, 10.75, 11, 11 and a quarter, and 11.5. It went up that far in a single order. 11.5 was the high side. So from 10.50 to 11.50, poof, in the blink of an eye. Just like that. In that move, it filled all of those resting orders. Okay? That's exactly what you have to think about if you're going to use any kind of indicator or any kind of tool to help you get into the market. You got to ask the question, what's going to move price? Those indicators, the RSI, the stochastics, the MACDs, none of those things can see this. And this is the only thing moving price. It's the only thing that's going to move it. Okay? Back here, when the market dumped and we got this big red candle, in that move down, it wiped out all of those resting orders that were underneath it. All those resting orders got filled, or they got taken off. Right? The person who had it on there pulled them off. And we see it all the time, right? Orders come in, they go out, in and go out, and they're all happening very, very fast. Because it's people like you and me. We're sitting behind the computer, maybe we put the order on, and then we decide, no, I don't want it there, and I move it. You know, we grab things on the dome and we move it around. So, you know, people are doing that. Now let's go back to a live market, and let's look at this. We've got all those live orders, right? They're moving around on the dome. If price is going to make it up through this level and get to the 618, it's going to need to get through all of these resting orders, all these people that are looking to go short. And like I said, don't look at those short orders and think, gosh, maybe they know something that I don't. Maybe I should be going short here. Don't do that. You don't know why they're going short there. Maybe they're in a big portfolio and they're hedging something. There could be so many reasons why somebody is looking to go short here. All right, so don't try to think through why their orders are on the dome. That's going to steer you in the wrong direction. Think about what you want to do, and then look at those orders on the dome and ask, are they in my way? Are they going to cause me a problem? Are they indicating to me an area of support or resistance? Because if price is going to make it through these levels, it's going to have to get through all of that liquidity. We could look at this, look at the area that we got right here, just this little area right here. And you can see how every time we get down to the bottom, it's getting bid up. That people are willing to buy in at this spot. This seems to be an area of temporary liquidity. But it's such a very narrow time frame. We're on a 10-second chart, okay? And this speed and liquidity here is so fleeting. It's so temporary. It doesn't even matter in the grand scheme of things, right? Because this is a scalper's perspective. So if you're going to try to trade, you've got to understand what's going on in the market, what's going on the chart. If we're going to expect price to move up from here, we're going to need to see enough positive order flow, not this resting order, but aggressive buyers come in and buy up all of that liquidity right there. If they can't come in and wipe that liquidity off, we won't make it through this level. And look at all those sellers, especially when we start to come back up to the 618. Every time we get close to the 618, we start to see a lot of liquidity. Look at that big spike of, not spike, but that big order that was resting there. That was a lot of people saying, I'm willing to go short here. Well, if we, kind of game it out a little bit, we've got a range, right? Or we did have a range. So there was sellers sitting here saying, hey, I've got a clean range. I'm going to trade that. Now, of course, these are 10-second candles, right? So that range didn't last for very long. It's a scalper's perspective when we're this close, right? When we're this narrow. And now if we move up to this higher time, now look at that range. And we broke out of that, right? Now we could use a Busby example and we could say, okay, well, here's our price move back down. Where, we're going to fill the trade, we're going to take these orders, but all of that is a scalper's play. If we move all of this back out to a normal time frame, right? We get back in here to the big deal, the regular market. If I am sitting here on a 5-minute chart and I'm looking at an area that I think is support, I'm going to need enough proof or enough validity to believe that price is actually going to hold at that level. I need to see repeated tests across the bottom, right? That price got there and buyers bidded it up, that they were willing to step in and take that at the lows, and that the sellers abandoned their play and got out of their positions. I want to see that kind of move, or it's not support. And I can be patient. I can say, if this is support, what's it telling me about the grand scheme of things, this 5-minute chart? If that is my support, what the hell is price going to do from here? Just stay here? No, it can't. It cannot just stay here. It will not just stay here. Then what good is recognizing this as a support level if I don't next think ahead and say, well, where are we going to go? If this does hold and people are buying up here, why? Where do they think we're going? Do they think we're only going to come back up to this quarter? And is that enough room for me to get my trade done? Or are maybe we going up to this quarter and I'm willing to stay in it for a longer period of time? When it comes to a support or resistance level, I hear from people all the time, well, how do you know that support's going to hold? How do you trust it? Oh, I was scared. I didn't trust it. I didn't believe it. I seen it coming, but I didn't take the play. Why? Why didn't you take the play? What's your risk reward? And if your risk reward is so horrible that you're scared of a loss, then you're trading too big and we have to fix your risk to reward. It's not about getting another indicator to help confirm that that's going to hold, because nothing can confirm that it's going to hold. It's not another indicator to tell us that there's momentum in the market, because we don't need something to show us momentum in the market. The orders coming in are what's showing us that. That's where our momentum is. So what do we need? We need a good risk to reward. We need something that says, I'm going to take this trade, and if I'm wrong, I'm going to trade small enough that it doesn't hurt. That I'm going to trade small enough that that loss doesn't even show up on my radar as something to even be concerned about. Just shrug and look for another opportunity. What that opportunity is going to be is going to be dependent on you. Do you want to trade the next level, the next area of resistance? I'll tell you guys what I like to trade. And it's why I'm a lot more successful than maybe a lot of you are right now. And it's not because I'm way more skilled or anything like that. It's because I'm patient. Look at this consistent message in the market. We had this explosive move off the low. It's the kill zone. So we already would have been prepared for a 2 a.m. move. The first candle got us all the way to the top of the resistance area. We broke through that and the quarter with conviction. Anywhere along the way, you could have joined into this. And it was a very clear story in the market. There were no sellers here. It was all buyers. The only time it went down is when people were taking profit. And it barely went down at all. Okay? Look at that very clear message. What did it look like in the order flow? What kind of trades were coming through at that time frame? You want to wait and find a message that tells you where we're going. Don't try to trade crap. Don't try to trade junk or choppy markets. You want a very clear, clean picture. You want a story that's being told, a story that you can actually read in the candles and in the price action. If there's no story here, why are you trying to trade it? So if we go over to, here's my 5-minute chart, and we look at this 5-minute price action, we want to see a very clean story in the market. We want to see repeated candles moving higher and higher and higher. And the only sell side activity that I want to see is profit takers. All right, that's what these wicks are. People were getting out of a trade, and buyers were very happy to step in and grab that up with conviction. I want to see that on the dome. I want to see all those buyers stepping in there. I want to see people willing to take over, right? I don't want to see sellers. I just want to see profit taking. And if I am trading short, then it's the same thing the other way around. I only want to see sellers. I don't want to see buyers unless it's just people taking profit. That clear, consistent message, when you start to look for it, you'll see it. I know that all of you can see that. So if you're trading and you don't have that, you got to kind of ask yourself, why are you trading? You think you're just going to get lucky? You think that it's good enough? If it is and you're profitable, great. But if you're losing frequently, then obviously it wasn't good enough. And you need a better story. You need to find a cleaner piece of price action. And when you go back and you look at the charts, you can see that clean price action. You can find it. It's very clear. It's one of the first homework assignments we ever did. Very clean, very clear price action. That is the easiest thing to trade. And if you only wanted to trade that, you would be a very successful person. Of course, none of us only want to trade just that, right? Because it doesn't come around every day. And that would mean that a lot of days, well, we just don't have anything to trade. And nobody wants that, right? So then we go in and we trade stuff that isn't so clean. And of course we can. Of course we can do that. But it's going to be harder. You're going to need to hone your skills to be able to trade in price action that has buyers and sellers in it. And then you're going to have to deal with that struggle. All right? But that's what we're here to do, is to identify those opportunities to be able to trade in that struggle. But don't reach out for the hardest thing out there and then get your butt kicked and say, gosh, this stuff is hard. You picked the hardest thing to trade, and then you're saying it's hard? No. You know what that nice clean price action looks at. And you know where it shows up. You know where it should be. Price action, basic clean price action, Hey, are we trending? Is it one of our trend days? No, it's choppy crap. Okay, but then why are you trying to trade it? Okay, guys, I appreciate your time. I look forward to seeing you at the next video.